on Talking Lifestyle. Property Fast Track with Charles Tarbey. Thanks to Century 21. Smarter, bolder, faster. Go to century21.com.au.
Charles Tarbey, welcome.
Thank you very much. Good to see you again.
And you too, mate. Another big show lined up. We've got plenty coming your way. We're going to go around the grounds and see what Century 21 has been achieving in other spots around the nation over the weekend as we have a look at auctions. And Tim Lawless is going to join us as well. He's with Core Logic, talking about the spread between investor activity and first home buyer activity. So,
yeah, that's a massive one, that one too. That's really in the news a great deal at the moment.
So I look forward to what he's got to share. We'll also talk to Tom Panos, who is an auctioneer of repute.
Resident guru.
Yes, indeed.
Certainly is.
It was an active weekend yet again. Some big numbers and plenty going on at auctions, Sydney, Melbourne and Brisbane.
Yeah, there was a lot more in Sydney this time than last week. Melbourne, of course, it's considered probably the auction capital. And I had plenty of time to review it because it was so wet I couldn't get out and play any golf. So
not a bad thing, that wet stuff sometimes for these review moments.
Very disappointed.
But Charles Tarbey is here to help you tonight. 13 12 83, Property Fast Track. If you've got any questions about if you want to get into the property market, maybe you want to reevaluate the way that you are representing yourself in real estate. Perhaps you're wanting to get into the commercial space or consider a purchase through maybe a self-managed superannuation fund opportunity. Maybe you want to sell, maybe you want to downsize, whatever it is. Charles is here to help you on 13 12 83.
Yeah, thank you very much, Nick.
So a market wrap for the weekend. What were some of the highlights for you and some of the touchstones?
I think what I like to try and cover every week are these four areas that really gauge the market right across the country. The auction clearance rates obviously are one, and they don't tell you everything, but they tell you certainly tell you what's going on in parts of Australia, but not all of Australia. And I also like every week to look at the listing numbers, whether they're climbing or decreasing, because one of the issues we had going back a few years ago was that the stock levels weren't climbing, and when you put that to buyer demand and you throw on some lower interest rates on top of it, all of a sudden there's this activity around the marketplace, which of course is what's caused a lot of concern. And you've got governments making various decisions, but generally they're making them around only a couple of areas, which might be Sydney, Melbourne. But you look at the stats across the West and you look at Perth, and it is a totally different market. So what they do here on the eastern seaboard will impact very heavily or negatively over there. So also like to look at rent movements, see how that's going week on week around different capital cities. And just to top it off, I look for the vacancy rates, because those are the ones that tell me which marketplaces I can predict might have some issues for landlords and investors in the future, and those that have the upside for landlords and investors, also penalising tenants in many respects too. 13
12 83. Charles is here to help you tonight. 13 12 83 is our number. If you have any question about real estate, let us know. A couple of lines are free. So what are you making of property listing numbers at the moment?
Yeah, they're down. And I looked at a couple of weeks ago, they climbed very dramatically. They climbed 12.31% week over week, which was a massive climb. And I thought, well, okay, either this is something spectacular that's happened, so I watched it very closely. And, of course, last week it was negative 0.51, and this week it's negative 1.11. Although we had such a big climb 3 weeks ago, I'm still keen to watch what might happen over the next few weeks, and just to make sure that it's balanced out. But that's the starter, Nick. That's where it really starts. And then if you look at the auction clearance rates, those clearance rates are really mostly Melbourne and Sydney that get most of the advertising in terms of clearance rates. Which was
around about 80%, just under 80% in Sydney over this weekend.
Yeah, it has been. The average across the country was 77.1. Sydney made it at 81.1 and Melbourne at 79.9. But Canberra still surprising me, that was 78.4. But the other capital cities don't rate very highly, although Adelaide will creep in there sometimes and get a great result. But the other capital cities don't. And again, auctions aren't the dominant method of sale, say, in a Sydney market. So you're really not getting the right reading.
Okay. Why do you think property listing numbers are down at the moment?
Mostly we found, and this is again, this listing average is a national average. So you might see in areas of the east or in the South Australian market, for example, you might see stock levels climbing. And also in parts of Sydney and Melbourne and Brisbane, you see stock level climbing. But overall, it's down. And I think the biggest issue, particularly where we need the stock most, is that people don't have anywhere to buy. So if they're going to sell, where do they go? And I think that's the perennial problem that we have.
It is, isn't it? I've heard a few people give that kind of anecdotal evidence that they've had a home maybe for 10 years. Yep, the kids have gone.
Yep.
They've got a 4-bedroom home worth a lot of money, maybe a couple of $1 million, and then look around, what can we get to downsize?
And that's the issue. If they're downsizing and they don't mind moving, outside of, say, if they were in great suburbs in Melbourne or Sydney and they wanted to downsize and move out, they could do really, really well right now, Yeah. And if you pick, and again, we used to see a lot of people, and they still do, would move from a Sydney market to a Brisbane market. You see a lot of people from Melbourne moving to the Sunshine Coast, to the Noosa area. They're very heavy investors in Queensland, North Queensland and further up. So again, sometimes the amount of money they might sell in the suburb there will enhance their opportunities in areas like that in the Sunshine Coast, and they do very well.
That'd be the perfect kind of downsizing opportunity, wouldn't it?
Yes, it certainly
So
would.
you sell your place, the old family home, say, go to a smaller property and maybe end up with cash in the kitty.
And that's what you could do if you wanted to get a job, say in Brisbane, and you wanted to move there years ago, and you had a property in Sydney. You could comfortably do that years ago, and you would be sitting up there in Queensland now with more cash in the bank and a home just as good. But again, it was all back to whether or not you can get a job too. So the economic situation is part of the play.
13 12 83, Property Fast Track with Charles Tarbey tonight. He's here to take your calls, and a couple of lines are free. We've got Cam on the line from Glenbrook in New South Wales. Hi, Cam. How are you?
No, I'm good. Yourself?
Good. How can we help you?
Yeah, I just wanted Charles' opinion on Lower Blue Mountains, specifically Glenbrook.
Oh, Cameron, do you live in that area?
Yeah.
Well, I live in that area too. So what do you think I'm going to tell you?
You got to be kind to yourself, Charles.
What's that?
Charles, I don't know what you're going to tell me.
Yeah, no, look, I have always looked at the Lower Blue Mountains. I bought a property there back in, my first one in 78, but the house I'm living in now back in 84. So I've lived in the same house, same street since that time. Cameron and I have the opportunity, fortunately, over the years to be able to live wherever I want, but I've chosen Glenbrook and I stay there. My children have investment properties there, and they also, my daughter lives somewhere else now, but my son lives in that area. I think the only issue with Glenbrook or the Lower Blue Mountains is the pricing issue, because there's no stock. That's one of the areas that's suffering incredibly from a lack of stock. You can go further up the mountains and buy, but Glenbrook itself's got only 3,000 plus homes, and it is just incredibly difficult to see a property for sale that doesn't have a sold sign on it within a very short space of time. So
I own property here. I just wanted your opinion on future prospects, I suppose.
It's one of those areas, Cameron, that normally you don't recommend an auction in certain areas, and in the Lower Blue Mountains or Penrith West area, you'd never usually recommend an auction unless it was a specialised kind of property. But in Glenbrook, I would, if I was selling in Glenbrook, I would put a property up for auction, because there's a limited number of properties and a maximum number of buyers. So that's how I would sell my property. But if I live there, Cameron, I'm a real estate agent, but I'm also a real estate agent's nightmare. I wouldn't sell.
Thanks, Cam.
I may have to, though.
Oh, well, look, Cameron, as I said, the best method for you would be auction, mainly because there's a limited number of buyers. A limited number of properties and a maximum number of buyers out there. As I said, my son bought recently, and he couldn't believe how, when he bought it private treaty, and it certainly wasn't through my company. We never deal through my own company because it's not at arm's length. And we thought he was paying a reasonably good price, but in a very short space of time, you were buying a property to knock the house down and rebuild for the same price he bought a lovely brick home. Hang in there,
So
Cameron, hang in there.
Fair to say, if I can hold on.
I would if I were you. And my real estate agent mates in the Lower Blue Mountains, most of whom have worked for me over the years, have probably got the knives out. So there you go.
Thanks, Cam. 13 12 83. We're talking property tonight. Property Fast Track with Charles Tarbey, and he's here to take your calls. 13 12 83. Mark's called in from Tulijua. Hello, Mark.
Good day, fellas. How are you?
Oh, great. Tulijua. Now, Nick, you know a lot about this area, don't
Yeah, I
you?
like the South Coast. It's a good spot. What's your question tonight, Mark?
Well, it's not a question about the South Coast, actually. It's a question about regional areas. areas like Townsville in Queensland,
Yep.
Geelong in Victoria, and maybe Albury, Wodonga in the southern area of New South Wales.
If I was to take a pick on those any of those three areas, I'd probably start with Geelong, and because of the connection with the government up in Townsville and the army, etc., that's a very, very strong area. I know the boys that operate the offices up there. There's a couple of gentlemen have offices in that region. They've been there a very long time, and it's an area that they particularly love, and it's well established. So those two areas definitely for me. And regional areas are getting great returns right now because in terms of a yield, they're far better than your capital cities are going to be. And there's still some growth. You see, what's happening out there, Mark, is that the halo effect is still moving out. It's still moving out of Sydney in great areas. Not all areas, but in great areas. And Geelong, well, that's proven itself to be a very strong market for a very long time, as has Townsville.
Okay, and what about Albury, Wodonga?
Yeah, well, I left that last on the list because if I was going to choose, that would be last on the list, not for any other reason than I believe there's still a bit more capital growth in Geelong and Townsville than that area. It's certainly a very well-established area, and how different it is on either side of the river. It's incredibly different in terms of lifestyle, in terms of shopping, in terms of homes. I found it really strange. My son and I drove through there, and we couldn't believe just crossing the river how different it was. But it also has proven itself to be a very, very strong marketplace.
Okay, thank you so much, Charles.
Thank you, Mark.
Thanks, Mark. 13 12 83. Couple of lines are free tonight to talk to Charles Tarbey. Anything to do with property, he's here to help you. I think Albury's on the NSW side, right? New South Wales side, and Wodonga's in Vic?
In Victoria, yes.
Right, so there's going to be some different kind of land tax considerations, and maybe
we have the same issue with licensing, real estate licensing, because they're two different licensing requirements either side, and it is just across the river. But they are fantastic places. They've been established for a very, very long time, and they're actually quite sophisticated. They've advanced, and restaurant scene, everything's really changed.
There's a couple of interesting places like that in Australia. You've also got the same kind of state rivalry that happens in Victoria with Mildura on one side of the Murray River, which is into Victoria, and the other side still in New South Wales, which is Wentworth.
Correct. And if you pop up to Queensland and you've got the Gold Coast, Tweed Heads, Coolangatta, that's split down the middle. They again have an office that attends the Queensland Awards, but they're located south of the border because Brisbane is closer for them than Sydney is,
The river border towns.
Very much,
right. 13 12 83. Charles is here to help you out tonight with some calls. I'm interested to know, you've pinpointed this thing called the halo effect.
Yeah.
So I wonder, in a case like Brisbane, Melbourne, Sydney, what is that kind of magic commuter belt? To go back to the earlier call, the fellow in Glenbrook, that's about an hour from Sydney, about 60 or 70 k's. Is that the magic point in keeping people interested in being a part of a bigger city where they can drive to work? Do you think beyond an hour is too much of a stretch for a lot of people?
It is getting out there. I mean, if you're going to go all the way up the top of the mountains, it's hard work. But people down the south coast are commuting from Nowra up, and people from the Central Coast and Newcastle are commuting down to Sydney. And so I think those areas are still, even though they might be a little bit away with the infrastructure, and that's the key, the infrastructure. If you've got the roads and they've got it north and they're getting it south, when you go west out towards the Blue Mountains area, there's been the 4-lane highway they've been working on since it was going to be finished in 1985. They're still working on that. And I've noticed how much busier it's gotten where I live now with the traffic because of that. So I think that it's quite comfortable to commute an hour and a half.
About an hour and a half. And I guess you got people from Geelong will go into Melbourne, for example. Gold Coast people go into Brisbane a bit.
I'm not sure yet that Bathurst is close enough. I'm sure that Goulburn's getting close enough because it's got a fantastic freeway. And when Badgerys Creek Airport opens, I would suggest there'll be a lot of people from Goulburn. Those areas will have jobs, and not just Sydney people. So,
Property Fast Track tonight. Charles Tarbey's here, 13 12 83. Taking your calls, couple of lines are free. In a moment, Tom Panos joins us with an auction wrap for the three big cities, Brisbane, Melbourne and Sydney. what went down over the weekend. Yeah, Nick Bennett tonight with Charles Tarbey, Property Fast Track, and our numbers 13 12 83. Charles here tonight to guide you through all things property. If you have any questions, a couple of lines are free, 13 12 83. Now, another weekend, another bumper result for auctions across Australia, especially Sydney and Melbourne. Both cities recording clearance rates of around about 80%, a surefire signal that buyers are still prepared to pay big prices, record prices sometimes, for homes and units. And it's always good to chat to Tom Panos, an auctioneer and a 2-decade veteran of the business. He's got his finger on the pulse and his hand on the gavel. And he joins us again tonight on Property Fast Track. G'day, Tom.
Hello, Nick. How are you?
Well, thank you.
Hello, Tom. Good to hear your voice, and great that you're going to join us each week to go through the Melbourne, Sydney, Brisbane marketplace and tell us some of your personal experiences and give people some advice on how to bid at auction, what they should be looking for when they're watching with auctioneers, because you and I both know auctioneers have different styles, and some of them call a property on the market, others don't. And so people are confused by that. So I always tell people when you're going to go to an auction, go and watch 3 or 4 auctions. Watch the auctioneers. You'll get their style, and when it's your turn, you'll know exactly what they're going to do, Tom. So can we start with you with Melbourne, because they were the big hitters. They had 1,300 registered auctions set for the weekend. How do you think the punters responded there?
Look, Charles, Melbourne had a fantastic week. It's very strong, and I'll talk about a property, a dishevelled former mayoral mansion, with lots of potential, got 4.6 million at auction, and that price is paid for this, 129-year-old Hawthorn Manor. So,
Hawthorn.
Extraordinary, and I've got to say, there's one thing that I'm noticing, guys, and that is that houses in Melbourne, houses in Sydney are still going gangbusters, but we'll talk about it maybe in a moment. I'm actually beginning to see some small cracks appearing in units.
Yeah?
And I'm definitely seeing...
You're not talking about the Gyp Rock?
No, they just normally, Nick, what they do with the Gyp Rock, they putty it up and they render over it.
You've got to stop giving away your home renovation tips, Tom.
So what are those cracks? What are you seeing there, Tom? What's happening with the unit market?
Well, what I'm seeing, Nick, is that there seems to be... I'll give you a classic example. I had sold 7 out of 7 on Saturday, and I had 3 auctions to go, and at 2 o'clock, I was, sent a few text messages to people that I deal in real estate. I said, I think I'm going to do 10 out of 10, but I didn't. I ended up doing 7 out of 10 because the last 3 properties were units, and there simply wasn't any buyers there. And one buyer, as he walked away, I walked to my car and he walked behind me. He said to me, I'm not worried about not getting this one. He said, there's another 150 that are going to come up shortly up here. So I think there's a perception from buyers, and particularly investors, that there's no hurry at all to get into the unit market. They see that there's going to be an oversupply of units coming through. So I think, Charles, you've talked about it in the past that that Sydney's probably and Melbourne is probably going to be getting an oversupply of units. I think the marketplace is responding already.
Yeah, I got belted on that one about 6 months ago, and I raised it again as an issue. Quite a few people felt that I was probably damaging a marketplace or not calling it like it is. But realistically, you can see it. You can see property coming out of the ground. You can see in certain locations. I say city locations strong. Inner city locations still very good. But the further you get out from the city locations, there are more and more developments. There are more developers stopping. There are holes in the ground where they're not going to start. There are developers that have sold their developments on because they weren't sure that it was going to work. You've got banks that have placed all sorts of different lending criteria now. You used to have, you can get 50% of the buyers across the line to a contract, the bank will give you money. Now all of a sudden they say, yep, 50%, but only 15% can be overseas buyers. Otherwise we're not going to lend you the money. There's a significant change in that area, which we saw a year ago, which I believe would have impacted, and it is impacting now.
Yeah. Well, Charles, the other thing that's really obvious is the absence of investors. So whatever banks have done in tightening lending policy is definitely taking effect. I mean, there was a property in Sydney, and this one's got a bit of history to it. It's actually a property known in Bennett Street, Surrey Hills. It actually ended up selling for 1.48 million, and it sold 130,000 over reserve.
Wow.
What was famous about this property is it used to be a property that was known that a lot of people used to go in to do drug deals, believe it or not, and even the late artist Brett
Whiteley.
He was often seen pulling up in his BMW.
Yeah.
And he actually ended up being found dead of a heroin overdose in a motel room in Thirroul, I think, back in 1992.
He did. It was a very sad ending, yep.
But this property was really interesting because even though it sold for 130,000 above reserve and it's in the inner city and a thriving, there was not one investor prepared to actually bid on this property. No sight of any investors.
And that's rare, isn't it, Tom? When you see what's been happening, that's very, very rare.
So, Tom, are you seeing this apartment correction, if you like, Sydney and Melbourne only at this stage, or are you also aware of it in Brisbane, say?
Yeah, well, no, I haven't seen anything to suggest that it's happening in Brisbane, but I think whenever we see a correction, I think we're probably going to see it more profoundly in the areas that have had the biggest rises, and that has been in Sydney and Melbourne. And on Charles's point, I don't think you need to be Einstein, Nick, to work out. All you've got to do is look up in the sky and look at the new buildings going in and say to yourself, is there more of these properties that are needed in that particular suburb? Now, probably in a city, you'd say at the moment, if you're an owner, you could still probably sell and not be losing money. But the question mark's out there on what it's going to be like when you go out past, Albans, and you start going to your Parramatta's, and you start going out further west to your Blacktowns, even driving along Canterbury Road, Charles, the other day. I got brought up in Belmore, and I was driving from Belmore into the city, and I looked around. Everything's been knocked down on Canterbury Road, and there's just units there. And I asked the real estate agent there, he says, "Oh, look," he said, "we don't get that many inquiries from buyers for these units, to be honest with you."
Wow. Yeah, well, that's what I had noticed. So that's fantastic, Tom. So I'll look forward to catching up with you and chatting again next week. I want some of your deep down stories that you generally don't talk about next time.
Good on you, Tom. Appreciate it, mate.
Stage view. Okay, thanks, guys.
Thank you, Tom.
Tom Panos, he's an auctioneer. Like, I love talking to auctioneers because they're the guys on the ground. They're the ones in the backyard. I reckon they're right there connected to grassroots. 13 12 83, we are talking property tonight, Property Fast Track with Charles Tarbey. Charles is here to help you tonight. Gary's on the line from Cinnamon Park. That sounds like a good spot. I love Cinnamon. How are you, Gary? How can we help you?
Cinnamon spelt with an S. Hi,
yes.
guys.
Yes.
You know what? Outside watering to see the horrible cricket score. But anyway.
Oh, God. Gary, I know your location very, very well. My mum and dad spent many, many years in a lovely cul-de-sac there in Cinnamon Park and in the newer area. Just down the road. And that's a really interesting place because, when you think about the areas around it, you're not that far away from Middle Park or not that far away from Darra, interestingly enough. And Darra is one of those places that people would never buy in.
Correct.
And so how fantastic is it? You go across the freeway, you've got the magnificent shopping centres there. So my sister had a little restaurant there called The Nook just on the other side.
Well.
Yeah, so there you go. Yeah, there you go. I do know that area very well. What's your question, Gary? Sorry about that.
That's all right.
That's all right. Look, I'm just preparing my house for private sale, and I was wondering the merits or otherwise of private sale. What I've got: 5 bedroom, 3 full bathrooms, lounge, separate dining, separate family, separate rumpus.
Look,
pool, double lock-up garage, high up on Cinnamon Park.
Yeah, well, that sounds like a very substantial property. Let me say to you, there are many different methods of selling a property, and each one would suit a different party. From a private sale point of view, for me, even though I'm an agent, I wouldn't do it myself personally, and I certainly wouldn't sell my own home personally because I like to keep a distance. I've found over the years that when you're negotiating, one of the things you should do, Gary, if you're going to sell privately, you need a mediator between you and the buyer. You don't want to be talking direct to the buyer. So I think that's the first piece of advice I'd give you because, battles can occur when you're face to face. So get a mediator in to help you negotiate. Now, when it comes to marketing your property for sale, there's so many different ways of doing that, whether you're putting up a sign or whether you're actually going onto the internet, or whether you're writing the ads for the internet, or whether you're doing your Google search, your search engine optimization, or your Google AdWords. There's a lot that goes on behind the scenes. And the only thing you need to be concerned about is that you don't undersell your property. Nothing wrong with selling privately. Just be careful that when you are marketing your home, you're getting absolutely the best possible marketing strategies, because at the end of the day, it's not about the agent's commission. It's about getting the best possible market price.
Good advice. Thanks for your call, Gary. 13 12 83. Charles Tarbey's here tonight. Property Fast Track, and still ahead around the grounds we go. We'll find out what's happening in Logan Village, probably not too far from Cinnamon Park.
Oh, there's some great areas up in Brisbane.
And we'll also see what's going on in the CBD of Sydney. 13 12 83 is our number. Charles is here tonight taking your calls. Property Fast Track. Nick Bennett's my name. Good to be here for this Monday. Charles Tarbey is with us, and he's talking Property Fast Track, all things to do with property. Charles has a myriad of advice. He has a wealth of knowledge, loads of experience. He's been selling real estate since we worked out 70s.
45 years.
Okay,
you have to keep bringing it up.
You began in the 70s.
Oh, my God.
This is good. Yes. He's got credibility. 13 12 83. All right, so we're going around the grounds now, and Warren Hucker's with us from Century 21 Logan Village in Queensland. G'day, Warren.
Oh, good evening, Nick.
Hello.
Hey, Warren, good to hear your voice. I know the wonderful Logan Village is nicely south of Brisbane. I think you're positioned very, very well nowadays with a lot more freeway work coming through. You're getting to the city a lot quicker nowadays.
Absolutely, that's so correct.
And that's what I liked about it. But I'd love you just to tell us quickly about your area, just a quick snapshot and what's unique about it.
Well, probably you've actually put your finger right on it. I think the most unique thing in our area is our location, that we're situated halfway between the Gold Coast and Brisbane.
Yeah, and people are talking about southeast Queensland very heavily as you move further down. A lot of people don't realise that area, you've got a lot of forestation still, but you've got a fantastic suburban infrastructure, correct, yes?
We have. It's a really good lifestyle living area.
And is that why you think people should buy in your area, because of the lifestyle?
Look, I probably think there's a number of reasons. One is certainly that we have predominantly acreage and quality lifestyle living here. Mm. Secondly, I think it's, as I said, perfectly located between Brisbane and the Gold Coast for easy commuting for work and whatever.
So if you got in your car and drove to the city, it'd take you 40 or 50 minutes. Would that be about right?
Yeah, about 45 minutes, yeah.
And you could still live on acreage?
Absolutely.
Wow, fantastic.
That's the beauty of it, yeah.
What about pricing in your area? If somebody was to buy a small acreage property, what would they pay?
Look, the median price in our area at the moment is currently at $535, around that.
Wow. And would that give you some land as well, Warren?
That would definitely give you acreage property. We're beginning sort of 1 hectare blocks, 2 acre blocks, at around about that price.
You know, when you think about it, that's quite extraordinary, Nick.
Sure is. It's great value. 13 12 83. And if you're after some advice about investing, particularly in Logan, then we've got this great opportunity here. Warren Hucker's on the line. He's been doing this since 1985. Almost as much experience as you, Charles. Almost.
Well, I've had 45 years, but some people might say it's 1 year 45 times.
So
I've gained nothing, you know.
13 12 83 is our number. So it's great to hear, Warren. You've got some, look, I guess a beautiful mix of lifestyle there. Not too far from Brisbane City, yet you can be on 1 or 2 acres for, give those prices again, under $400,000?
No.
Probably closer to five.
Yeah, 535 is the median price. So you can pick up something here if you're in the 500 bracket for sure. On a couple of acres, and probably a 4-bedroom, 1-suite home.
Wow. Well, there you go. There's still affordability, and you could still catch a quick trip into the city with public transport or a car, and you're on your way.
Thanks for your time, Warren.
Thanks, Warren.
Warren's at Century 21 Logan Village, and we're going to shoot back down the East Coast into Sydney CBD now with Ken Sharp.
Yeah, this is a really interesting contrast between Logan and back to the city of Sydney.
Sure is. Hello, Ken. How you doing?
Good, thanks, Charles. Nick, good evening. Congratulations on the show.
Thank you.
Thank you. It's only the second week, so save that for another time, but thank you all the same. Ken, you're a very, very well practiced real estate agent, and you've built a substantial business over the years. Now, you're right in the heart of it. You're right in the thick of the city of Sydney. You do property sales, you do property management, you do a lot of work around the industry. How has this marketplace that everybody keeps talking about impacted on you?
Look, at the moment it's been red hot. As you say, we're in Sydney City. We're servicing everything from luxury apartments in, say, Barangaroo down to Chinatown. And sort of to create a picture, I guess, for you guys, at the moment I'm sitting in the office. It's 8 p.m. on Monday. I've got buyers in one of our meeting rooms waiting to sign contracts now. And I've got one of my colleagues, George, waiting for someone to arrive from the airport, about to take them out to look at properties. Yeah. So, yeah, really strong, kicking on in the city.
And I think that's the biggest issue we have. The city of Sydney itself, it's hard to complain. You know, there was a time not that long ago, Ken, you recall where there was an abundance of apartments for sale in Sydney and there weren't that many buyers.
Absolutely. I was just going through some archives now, looking at 2005 and headlines in the media. And yeah, there was stock available, no buyers, but that's actually a good market for us to work in as well, because although hard to come across buyers, it's good for the sales agents who have stock and can actually put buyers and sellers together.
So the marketplace you're in, you can forget about comparing it to anywhere in Australia at the moment, anywhere in Australia. And this is the issue. A lot of people are looking at where you are and they're making that the entire Australian market, but it is so unique. The one-bedroom properties now, the ones that people never wanted to live in, if you go back to the bed-sitters and the one-bedders, the ones that banks will finance, are you finding that people are absolutely snapping those up at crazy prices as well?
Red hot. So a few years ago, maybe 5 years ago, you used to look at them at, say, $200,000, and now you're talking about $480,000 for we're talking 20 square metres, 25 square metre bed sit.
Wow, and most banks won't touch that, Ken. Banks are reluctant to touch it.
A lot of buyers are either mum and dad investors refinancing against a house,
right?
So they've got the equity, or a lot of self-managed super funds as well.
Wow. So tell me, why do you think people still invest in your area given that the prices are rising? Are they going to get the rental return?
Look, rental returns are right. We're still getting about, on a brand new purchase now, 2.5% to 3%, which, with rates where they are, isn't too bad.
Sydney's one of the better markets. When I do my stats, Ken, as you know, there's something that I particularly enjoy doing, very boring, but nonetheless. The vacancy rate in Sydney has dropped to a low 0.81% in this last week. Perth was up around 10.14 last week. It's down to 9.07, which is a great sign. But the Sydney market has pretty much outperformed most markets over the years in terms of vacancy rates, and that's really what an investor wants to know.
Yeah, absolutely. The other item I look at, which I think is the huge amount of growth or the potential for growth, is when you compare Sydney City to the other international cities. So if you start talking about New York, if you start talking about Singapore, London, the prices in Sydney are, comparatively just so low. But I do think there is going to be growth, and as there's more and more development in the city and the population growth, we're going to start seeing people flocking here, and those prices have to catch up internationally.
So, Ken, despite what Tom said earlier, are you seeing a bit of an adjustment in the apartment pricing? He thought that maybe it's coming off the boil a little bit.
Look, I think we deal predominantly with the resale stock, so I think quality apartments at the right prices is very strong still. I do think on the brand new stock, where it's been predominantly overseas buyers and money coming internationally, that slowed down a lot. And I don't think it's due to buyers not wanting to buy. Probably a bit more so on the banks and APRA and the tightening of lending, getting money out from overseas, and these sorts of things hitting it or impacting.
Good to hear your insights from the Sydney CBD. There goes Ken Sharp, who's with Century 21, right in the heart of Sydney.
Thanks, Ken. Thanks
for your time. 13 12 83, Charles Tarbey and Property Fast Track tonight. Nick Bennett's my name, and Charles has the expertise, and he's happy to guide you through the whole property scene, no matter whether it be residential or commercial, maybe semi-rural. We heard about some semi-rural opportunities before in Logan in Queensland. 13 12 83. In a moment, the spread between investor activity and first-home buyer activity, it's never been wider in favour of investments, and we'll unpack that in just a minute. 13 12 83. Couple of lines are free, and Charles Tarbey here for another maybe 10 minutes or so. So here to help you with any property questions. Now, over the past 25 years or so, property investors have always been more active in the market than first home buyers, but alarmingly over recent years, that gap has widened a lot, and the gap between investor participation and first home buyer participation has never been wider. Here are the numbers. Chew on these. In January of this year, finance data show that investors made up 39% of the market, but first home buyers made up just 7.1%, a record low. What we do about this is a question being debated by all levels of government in this country, and there doesn't look to be an easy solution. Tim Lawless is the head of research with CoreLogic, and he's examined closely all of this, and he joins us on Property Fast Track. Good evening, Tim.
Good evening.
G'day.
Thanks for having me on the show.
Pleasure.
Tim, good to hear your voice. Tim is an exceptional practitioner when it comes to data. He's been in it for a very long time. I've known Tim for 25 plus years, and he not only worked in the industry as well in the early days that allowed him to get his data and capture his data, but he's continued that. And CoreLogic, of course, have just grown to be one of the giants of data around Australia and around the world, actually. Yeah. Good day, Tim, again. Good to see you, mate. Oh, not see you. Oh, good to hear your voice. You up in Brisbane?
I am a little bit north of Brisbane. I'm at the Sunshine Coast today.
Well, we were talking about the Sunshine Coast before, and I picked the Sunshine Coast as an area that was going to take off about a year ago, and I got to say to you, and I think I've mentioned this before, our 3 of the top 4 offices in Australia are on the Sunshine Coast for my company.
Well, no surprises there. I think you picked the timing pretty well, actually. The market up here is just racing along.
Oh, tell us what you think anyway about what's happening out there.
Well, it's really a mixed market. You know, we're hearing lots of stories about how Sydney and Melbourne are driving all the capital gains around Australia, and that's certainly true. We're actually seeing a lot of other markets now starting to accelerate. You know, just look at somewhere like Canberra, for example, where we're seeing values rising at about 10% per annum now. Even a market like Hobart, which was virtually asleep for the past decade, is now starting to see quite a strong rate of capital gains. We're seeing values rising at nearly 8% per annum in that market as well. But of course, go to Perth, go to Darwin, go to some of the mining regions, and we're still seeing values falling in those markets. So I think this is probably the most diversity we've seen in quite a while.
Tim, is investor activity increasing at the expense of first home buyers?
Well, I think it is. And when you look at the numbers, you know, the headline numbers you mentioned there, which was 39% of mortgage demand is coming from investors, it's actually probably a little bit worse than that because those numbers include refinance loans. So when you look at the national numbers excluding refis, those people who already have a mortgage and they're just getting a better rate, it's more like about 50%, well, nearly 50% of the marketplace is based on mortgage demand. And if you go to somewhere like Sydney, it's getting closer to 60%. You know, your long-term average, if you look at where investors normally would be in the market, you generally expect about a third of the marketplace to be investment-driven. So this is one of the reasons why we're seeing a lot of discomfort from the likes of the RBA or APRA, the prudential regulator, around how fast investment credit growth is pacing at the moment.
All right, so just to be clear there, normally you'd expect to see about a third of investors taking up the market share, but you're saying in Sydney right now it's double that almost at 60%.
That's right. It's about 60%. And it has been a little bit higher than that in the past. Before APRA brought in some regulations in 2014, it was about 65%. But it has been rebounding since the middle of last year when we saw the rate cuts. But
the trend of investor activity outpacing first-home buyer activity is nothing new, right? Have you ever seen it par for par?
No. The last time we saw investors and first home buyers around about equal in the marketplace was when there was really quite significant incentives there for first home buyers.
Yep.
Think of, say, 2009 when the first home buyers grant boost was available, or think of, say, 2010 when New South Wales changed the stamp duty concessions for first home buyers, and we saw a bit of a bring forward of demand. So it really does highlight that first home buyers are very sensitive to stimulus in the marketplace. But I think it's been proven plenty of times now that grants and so forth, sure, they do bring first home buyers into the market, but very quickly those grants are simply passed on to further price hikes.
Yeah, that's right.
Tim, I wonder if you can go a bit deeper into this research that you've done to ascertain a rough figure here. I wonder how many of these investors are first-time purchasers but choosing to rent, to not occupy.
Well, that's a great question, but unfortunately there's no evidence to really back up what's really largely anecdotal. But, you speak to anybody in the marketplace, particularly any prospective first-time buyer, who's trying to buy in, say, Sydney or to a lesser extent in Melbourne, and they're facing quite a significant barrier to get into the marketplace. Generally, a 20% deposit, a 20% deposit on a $1 million house in Sydney is a big challenge for a lot of people. So I think you're right. We are seeing more first-time buyers simply deciding either to stay at home with mum and dad for longer, or they're renting, and they're getting into the marketplace as investors.
I'm one of the very few parents that wants my children to move back in. Tim, you mentioned Canberra and Hobart. The clearance rate in Canberra last week was 78.4%. It's been very strong for quite some time. But what concerns me about Hobart, apart from the fact you can buy some fantastically high-quality properties at a low price, the rental movement there seems to be going the other way. It's moving downwards, meaning that if we get too many investors down there, the landlords actually may not be able to find enough tenants to fill the properties that they're buying.
Yeah, that's always a concern when we see rents. Rents are relatively flat around most areas of the country, but as you say, they're relatively weak in Hobart and Tasmania as well. But interestingly enough, it doesn't seem to be mostly investors driving the Tasmanian market. On these same housing finance numbers, I mentioned Sydney was at about 60%. In Tassie, it's only about 25% of the marketplace will be investment driven. It does seem to be more lifestyle buyers that are targeting the Hobart and the Tasmanian marketplace.
But there are properties, you can buy properties there, brand new properties in the capital city of Hobart for $250,000 to $280,000, brand new on a block of land. And I think this is an incredibly attractive feature. And we talked about the halo effect hitting outlying areas and other capital cities, and that's occurring. But I'm just keeping a real close eye on it, because I think that if there's too much investor activity, it could be a dangerous place.
The other thing about Hobart, of course, it doesn't have the diversity of economic conditions like you find in a large city like Sydney or Melbourne. So at the moment, it's very much being driven by a strong turnaround in migration rates and tourism numbers. But it doesn't really have the depth of the economy there, which also makes it a bit of a riskier option.
Tim, thanks for your time. We must leave it
Tim.
there. News on the way. Tim Lawless, who's CoreLogic's Director of Research, and Charles Tarbey, thank you tonight. It's been a pleasure to get into a bit of property fast track. You're back next Monday, and Charles here to take your calls, all things property, in a week's time. Thanks, Charles.
Thanks.